If you think you can only start investing with a large amount of money, that's absolutely wrong. Today, I'll show you exactly how to begin your investment journey, even if you have just $100. And here's the thing, this $100 isn't just money, it's a learning tool. If you already had thousands, you'd probably know how to invest. But starting with $100 teaches you the basics safely, builds confidence, and sets you up for bigger investments later. Hello and welcome to the Next Generation Millionaire, the channel where we break down real strategies, proven facts, and actionable steps to help you build wealth, invest smartly, and take control of your financial future. If you're ready to learn how to grow your money and mindset, you're in the right place. Why investing matters. Investing small now allows you to experience compounding, market behavior, and financial discipline, lessons that are far more valuable than the dollar amount itself. By the end of this video, you'll know exactly where and how to invest your first $100 in 2026 and how to make it grow smartly. Why $100 is enough to start investing. Why is $100 enough to start investing? Because that $100 is your reality check, your first lesson in understanding how investing really works. This isn't about gambling or chasing quick wins. We're here to learn the fundamentals, to understand risk, compounding, and making informed decisions. On social media, you've probably seen countless people showing off cars, watches, or luxury lifestyles, telling you to join my course or promising that you can turn $100 into $1,000 overnight. Let me be honest, that's absolutely fake. Those flashy posts are meant to distract you, make you feel like you're missing out, and push you into spending money on programs that don't actually teach you how to invest. Starting with $100 gives you the perfect sandbox. You can experiment safely, make small mistakes without losing your financial security, and learn the strategies that really work. You'll understand how to pick investments, track their performance, and develop the habits that can grow your money over time. Think of this $100 as an educational tool, a stepping stone. Once you master the basics with a small amount, you'll be ready to invest larger sums wisely in the future. The goal isn't to make a fortune overnight. It's to build knowledge, confidence, and a foundation that can turn into real wealth over time. Learning over earning. This $100 is for you to understand how investing works. You'll experiment, learn, and make informed decisions. Fractional shares and ETFs. With modern apps, even $100 can buy a fraction of companies like Apple or Tesla, or spread across low-cost ETFs. The compounding advantage: the earlier you start, the more time your money has to grow. Small steps today lead to big results tomorrow. Creative twist: think of this $100 as a sandbox. You get to try strategies, make decisions, and see real results, all without risking a life-changing sum. Step-by-step 2026 investing plan. Step 1. Pick the right platform. Choosing the right platform is the first and most important step. In 2026, there are multiple apps and brokerages that let you start investing with as little as $1. What you want to look for is low or zero account minimums, fractional shares, and low fees. Apps like Robinhood, One Finance, or Fidelity Mobile are excellent choices. Fractional shares let you buy a small piece of expensive companies, so even $100 can get exposure to big players like Apple, Tesla, or Amazon. Think of this step as choosing the vehicle for your journey. You want something reliable, user-friendly, and affordable. Step 2. Decide your investment approach. Before you invest, decide how you want to allocate your $100. There are 3 common approaches for beginners. Long-term growth through ETFs or index funds. These allow you to invest in hundreds of companies at once, spreading risk while participating in overall market growth. For example, investing in an S&P 500 ETF gives you exposure to the 500 largest companies in the US. Individual stocks. Only choose this if you're willing to research and follow companies closely. Start small, maybe $10, $20 per company, and diversify. Robo-advisors or automated investing. These platforms, like Betterment or Wealthfront, automatically allocate your money based on your risk profile, making investing hands-off and beginner-friendly. The key is to pick a method that matches your comfort level and goals. There's no one-size-fits-all. Step 3. Make your first $100 investment. This is where the learning begins. Take your $100 and make your first investment, whether it's a fractional share of a company, an ETF, or a small automated portfolio. The goal isn't to become a millionaire overnight, it's to get hands-on experience. By making a real investment, you'll learn how buying, monitoring, and tracking performance works. Even if the first $100 grows slowly, the lessons you gain are priceless. You'll see how your money reacts to market movements, dividends, and compounding over time. Step 4. Automate small contributions. Once you've invested your first $100, the next step is to build consistency. Even small, recurring investments, like $25 or $50 per week, can accumulate surprisingly fast. Automation is key. Most apps allow you to schedule automatic transfers, so you don't have to remember to invest each week. This helps you avoid emotional investing, ensures discipline, and lets compounding work its magic. In 2026, automation makes it easier than ever to grow your portfolio without even thinking about it. Step 5. Treat it as a learning journey. Finally, think of this first $100 as a learning tool, not just money. Track your investments, study market trends, read about diversification and risk management, and reflect on your decisions. Each small step, each trade, each observation builds your financial IQ. By experimenting safely with $100, you're preparing yourself to make smarter decisions with larger sums later. Remember, investing isn't about instant profit, it's about developing the skills, habits, and mindset that lead to long-term wealth. Most important thing is to avoid mistakes. Before you start your investing journey, it's important to understand the mistakes most beginners make, so you don't fall into the same traps. Many people jump into investing without a plan, chase hype stocks they don't understand, or panic at every market swing. Some follow flashy social media posts promising overnight riches, while others pay high fees for courses or platforms that don't add real value. Here's the key: these are mistakes you don't need to make. Learning from others' errors can save you time, money, and stress. Let's break down the main pitfalls and how to avoid them. Mistake 1. Chasing hot tips and hype. Many beginners see a stock trending online and rush to buy it, hoping to get rich quickly. The truth is, these tips are often unreliable, short-term, and risky. Your first $100 is meant for learning, not gambling. Stick to companies or ETFs you understand, and focus on consistent, long-term growth. Mistake 2. Overreacting to market fluctuations. Markets go up and down, that's normal. Many beginners panic and sell during a dip, losing potential growth. Instead, view small market changes as part of the learning process. Your first $100 is for gaining experience and understanding market behavior, not timing every move perfectly. At the last, mistake 3. Treating investing as instant profit. Some people expect their $100 to turn into $1,000 immediately. That mindset leads to frustration and poor decisions. Investing is a journey. Your $100 is a learning tool. Focus on building knowledge, consistency, and smart habits. The returns will follow over time. Remember, every big investor started small. Your first $100 is your ticket to learning, growing, and building real wealth. If you're ready to take control of your financial future and turn knowledge into action, hit that like button and subscribe. Join the next generation millionaire family, where we turn smart strategies into real results, and let's grow together, one step at a time.